Good afternoon, and thank you for joining me today. I'm Jane Morgan, the Investor and Media Relations Manager for Challenger Exploration. To tell us more about the projects and discuss today's announcement regarding the Julian Gold Project in Argentina, we are joined by Challenger's Managing Director and CEO, Chris Canal. Good afternoon, Chris.
Thanks, Jane, and welcome everyone. And I'll spend 20 minutes walking you through Julian, and then we'll take some questions as well. Just a cover photo of Julian there on the front page. So resource, 2.1 million ounces, open in all directions, got a high-grade skarn component of 1.1 million ounces at 5.6, which is significantly larger in the high-grade component than we thought. And, look, I think the way it's looking is by the time the resource is 3 or 4 million ounces, more than half of it's going to be skarn, which bodes well. And look, don't forget our Ecuadorian project, some of the results there, 250 meters at 1.4. We sit next to a 17 million ounce ore body. We should have some more Colorado V holes coming out next week. I'm just waiting for final assays, but I think we'll give the market an understanding there. But we think we've got the other half of Cangrejos, which is 17 million ounces, and right now we're getting zero value for it. Cash balance 19.5 million. We've almost finished our program in Julian, so we've gone down to 5 rigs from 9. So cash burn will be around about $7 to $8 million a quarter from here. So not a need to raise money in the immediate term, and we're actually looking at a couple of royalty options at the moment as well. Company strategy, and as of today, this company strategy is real. Yesterday we ran the San Juan mining minister through the resource. He's a mining engineer. And his response was, look, guys, don't take this personally. I like you, but you've now got Argentina's next gold mine, and I'm going to have to put a lot of pressure on you to get going and actually put it in development because, looking at the economics in San Juan, in fact, you've got 2 million ounces, it's big enough. So really, you've just got to go. Some of the milestones to look forward there, again, we've actually drilled 185,000 meters, so the 204,000 meters now, so it won't take long for a resource upgrade. And, where we get to is high-grade starter pit in Argentina. There's a sort of 5 gram plus feed there for the first 2 years. That means low capex, we can scale into Argentina. And then if you're doing 200,000 ounces a year of low-cost gold, that makes $1 billion capex to add another 500,000 ounces or more in Ecuador eminently fundable, which differentiates us from a lot of the other Aussie companies with nice big low-grade Ecuadorian projects. So really the asset base we've got here can create a 750,000, $1 million ounce a year production company. And that's the path we're on now. Julian, just looking down from the air. So basically, we've now got 3.5 kilometers to strike. We've pushed it another 400 meters north as well. The resource here covers, what you can see in the green, which is 2.2 kilometers. So really, we've only drilled 60% of the strike extent. It's still open at depth, open in all directions. What does the resource look like? Focus on the sort of, the right-hand table, which is effectively the grade tonnage curve. The fact that we did this at a 0.25 gram cutoff is really a factor of the low costs in Argentina. We've got indicative quotes for 60 cents a litre diesel wholesale. I think everyone knows what diesel costs in Australia. Electricity at 10 cents a kilowatt hour if we take it from the San Juan power utility. We've had build, own, operate solar producers give us quotes of 0.6 cents and 8 cents a kilowatt hour. Power is generally 1/3 of your operating costs, 1/3 of staff. There are a whole sort of raft of skilled mine workers in Argentina. We'll end up paying them between $1,500 and $2,500 a month compared to 4 times that in Australia. So what costs $4 a tonne in Australia costs $2 a tonne in Argentina, which is why we've been able to use such a low cutoff. But if you sort of look at some of the other cutoffs there, at a 0.5 gram cutoff, almost 2 million ounces at 2. Or if we want to look at the underground route, there is basically a nice core there of 1.6 million ounces at 3.1 grams. The one thing that Julian has in its favour is if gold prices or costs change significantly, you've got the ability here to dial up your own head grade, and it will be economic even at ultra low gold prices. What's it look like? So this is a long section on top showing the grade. As you can see there, I've highlighted 3 sort of zones in red circles, which are your high grade starter pit. Yeah, open along strike, open down dip. Most of those holes, you can see the projection of deeper. You've got a body dipping at 45 degrees. The hole goes through it and further down. So all of those deeper holes there are actually behind the ore body. You know, as we sort of get to this, you know, we expect that this, you know, it'll extend to the bottom of the page, and it'll get much, much larger. And then the bottom is the resource classification. So the higher grade components are, you know, in indicated category. We'll drill those out to measured, but that bodes well for us being able to do a starter pit. And then, you know, in terms of where have we come from, where do we go? Now that we've got a resource out to market, we can sort of say that original resource was never 500,000 ounces at 12. We did the numbers early. It was about 250,000 ounces at 5, but because it wasn't chalk, we couldn't put it out. So, you know, at the moment, on the right-hand side is what it looks like in 3D. You can see down here in Verdi, there's a gold block, which is the high grade coming in. Yeah, we're finding a lot of high grade material as we go deeper, but, you know, still open in all directions, and 5 key areas where we're drilling at the moment where we think we'll get a lot of resource growth, including down at Fleur de Hurley and about 500 meters south along strike, which is down dip from, you know, the sort of 15 meters at 13 in the adit. We're getting into what looks like some high grade mineralization visually down there as well. And key takeaway from this resource, it was based on 126,000 meters of the 204,000 meters. So, you know, we're not doing a scoping study at the moment. You know, we'll do that when we finish the 200,000 meters, simply because we think this resource will grow substantially. You know, what does it look like? Again, you know, I've got some type sections I'll walk through here, just showing where they are. We'll go from south to north. And then on the left there is the core from a hole we're still drilling down at Fleur de Hurley and 600 meters south. You can see there, you know, some massive sulfides in the core, and then that intrusive that's all sort of bleached white, that's actually alteration, and those black bands in there are sulfides. That generally goes 1 gram or 2 when you see rock like that. So Centerton, which is the southernmost section, the blocks there you can see are actually the current resource wireframes. You know, purple and red are the high grades. And then the holes in blue are holes that we've drilled. We're waiting for assays. I've marked where we've intersected massive sulfides. You can see there that as we've infilled and extended, you know, it looks like we're joining the gaps in Centerton. You know, you'll probably add about double the mineralization there. And, you know, Centerton is quite significant. It's 330 ounces in the resource at the moment of high grade. And we see the potential to double that. You know, it's still open at depth, and there's a big sort of high grade zone expanding and heading north at depth. This is just showing the geology of it. And again, you're highlighting, you know, the fact that the resource is over this 2.2 kilometers. We've got some significant intersections sort of, you know, much south and north of that. Second type section. So this is basically the extension of the Verdi zone south of the Magnata Fault. All of that stuff there in the blue and the green that's below the open pit, that's actually not in the resource. The way we do this resource is we run an optimized pit shell, which effectively tells us what we can mine at $1,800 gold. And then we can only report what's greater than the gram under it, because we can mine it underground. So all of that mineralization there currently isn't in the pit. You can see, you know, follow-up holes down dip have both intersected. You know, what's logged is actually looking like it goes far higher grade. This is a lightly drilled area, so some high grade here at depth, some mineralization along strike where there hasn't been a lot of drilling, has the potential to push this pit down, and you would all of a sudden, you know, get a lot more of the ounces that are actually there in this sort of, you know, sediment hosted zone into the resource. You know, at the moment we can only get 100,000 ounces of probably 250,000 ounces that's in situ into a resource under the JORC code. Magnata Faults, you know, this is the western end, still open very much to the west. We drilled a bunch of holes and got some low grade intersections. We've now drilled deeper, and what we're seeing is, you know, high grade Magnata Fault mineralization coming back in that's open at depth. We've got a hole going in under hole 491 that got 16 meters at 17. And then on the right, there's the Manto. You know, that assay is pending. Looks like it's pushed the Magnata Manto further up the surface as well. It actually outcrops on top of the hill there. So we've got to sort of do some surface trenching as well. But again, you know, we'll grow the Magnata mineralization significantly from here. This is the central Magnata fault. You can see that it splits into sort of 3 zones. And one of the key takeaways with the Magnata fault is you drill a hole, you don't find anything. Doesn't mean it's closed off at depth. It's a factor of where you've had open space. So basically, hole 442 there, 29 meters at 5.3, that was drilled under some holes where the gap is that didn't really get anything. And, we've also got some deeper drilling planned under that hole and further depth. This big sort of, resource area here may well come back in at depth as we go underneath it. It's just a factor of how the faults push together and where you actually had an open space to fill up the mineralization. As we move sort of north into Verde, and this is, what we're seeing everywhere, basically, a couple of the holes assays pending have intersected what looks like high-grade skarn mineralization at depth at Verde. There's also a new zone coming in, an intersection there of 26 meters at 2, including 4 at 12, that we just didn't have enough drilling to get any of that into the resource. But again, very much open at depth and going to expand. Same thing in the gap zone. You can see, what we could currently get into resource given the lack of infill drilling. These infill holes have actually intersected mineralization, and you can see there the red dots are basically what the wireframes will look like, or what the mineralization will look like when we can include these holes with assays pending. And these will hopefully push the pit down as well. Gap zone's got a big bulk zone of mineralization that, again, the blobs that are green and blue there that we couldn't get into the resource. That intercept there of 104 meters at 1.7, only the top 30% of that actually got into the resource. And, there's some of the intercepts there, basically, that are below or not in the open pit there, a bunch of, 50 and 60 meter intercepts at 0.7 and 0.8. We'll look at some bulk underground mining, and we may be able to get that into the resource as well. But again, the unconstrained resource was almost 2.5 million ounces. So there's 400,000 ounces in situ there that we haven't been able to get into the resource under the JORC code. And, the sort of northernmost section here, Verde zone, which is really interesting. Hole 520 was the last of the holes we actually got into the resource. We fast tracked that. So, I think the last hole on top of that was about 498. Reason we fast tracked it is it intersected 2.5 meters of what looked like manto. It was within limestone. You see the main manto up here in purple. It goes better than 10. And basically, assay's got 2.5 meters at 64. And again, this is what we're seeing here in Verde as we go deeper. There's a distinct high-grade zone, what we think it's the extension of the manto, that is basically coming in. We've drilled some holes along strike and down dip. They have all intersected, similar looking stuff as well. So we think this is an area where, we'll get significant resource growth. And also, because this was intrusion hosted, we used different top cuts, and I'll talk to that later. But if we had to use manto style top cuts, you probably double the 80,000 ounces in this deeper zone to 160,000 ounces. And again, just to sort of wrap up where the growth comes from, deeper at Centerton, this new high grade domain at Verde, the gap zone there where we're drilling underneath and around hole 458 that got the 70 meters at 7. We could only include a little bit of that into the resource, and there's some holes there that look like they've intercepted some nice mineralization as well. And we're now pushing mineralization Verde style across the Sanchez fault as well. And on the bottom of the table there, basically that's the resource if we didn't use any top cuts. Generally what you do is you sort of statistically run your top cuts, you take away the sort of top 2% of the intercepts and treat those as being, whatever the 98% intercept was. If we don't run top cuts in Walilan, that resource increases to 2.5 million ounces. And as I said, we've used the sort of intrusion hosted top cuts on that sort of deep Verde zone. And had we not done that, we would have probably got an extra 100,000 ounces into the resource. I think when we get more drill data, we'll be able to do that next time, which means, we've got another 100,000 ounces up our sleeve as well. And again, this is just showing some of the intercepts outside of the pit, 5 meters at 8.7 meters, 400 meters north, 13 meters at 15.5, 600 meters south. Some deeper intercepts here that haven't got in, that actually were holes that were far enough out to intersect, the Verde zone on trend. So again, this is all open at depth. You can see there's some high grade shoots there that we'll aggressively chase as well. And, I suppose, what does this all mean? The network we've spoken to before, but you basically, really high value concentrates, no deleterious elements, which means high payability, low transport costs. And the one thing we were hoping to get out of this was a robust high-grade starter. And we've done various lower value pit shells here, which effectively tell you at a $600 an ounce cash cost, what can you get into the pit? So you can see there's 340,000 ounces at a grade of 5.3, or over 500,000 ounces at 4.4. There's our high-grade starter pit. That lets us start at maybe 1 million tonnes per annum treating the skarn. Year 3, we'll add another 4 million tonnes per annum treating the intrusion-hosted material and double production. But effectively, you do the second leg out of cash flow. So it keeps your CapEx down, between 100 and 150 million. And then, again, all of this is basically around, 2.2 kilometres of a circular magnetic feature that's got another 3 kilometres around the other side that's undrilled. And then when we step back, we've got another sort of 4 or 5 of these same anomalies as well. So really, we're only just getting started. This is very much an interim resource. Almost finished the 204,000 metres now, so there'll be an upgrade sooner than I think the market anticipates. And, final message, don't forget Ecuador. Every single one of these sort of regional anomalies we've drilled has got better than 500 metres of gold intersection in it. It sits 2 kilometres away from a 17 million ounce ore body that doesn't have a high-grade starter pit, has an ultra-low all-in sustaining cash cost. We now have that high-grade starter pit. So, there's a window there for someone to put together potentially 30 to 40 million ounces where we have the high-grade starter pit, and that will be ultra-valuable. And I just don't think the market's giving us any value whatsoever for that. So, thank you. And I'm very happy to sort of take some questions now.
Well, thank you for that, Chris. I might just jump into them, and I encourage everyone to reach out by the Q&A function at the bottom of the screen if you've got any questions. But you also actually did mention this, but when can we expect an upgraded resource on the rest of the drilling?
So look, in terms of timeline, we'll finish this 204,000 metres sometime, probably in the first couple of weeks in July. It's about 2 weeks to effectively log and cut the core if we can get the backlog down a little bit now that we've only got 5 rigs. Call it a month to get it all into the lab. Then we're really in the hands of the labs. Turnaround times have been 35 days. They're ticking up now because of the busy season in Canada. Maybe call it 2 months. So mid-July, mid-August, mid-September, mid-October, hopefully sometime October. If the labs let us down, it probably rolls into the first couple of weeks in November. But certainly the fact that it's been 9 rigs drilling it out for the last bit, it'll be a lot quicker.
Well, thanks for that, Chris. So just another one. So how are you going to allocate drilling budget between Argentina and Ecuador?
Look, Ecuador is crying out for some drilling, but having said that, Argentina still is the main game. Without Argentina, we can't fund Ecuador. So, we'll still have well and truly over half will go to Argentina. In terms of the next drilling, once we finish the 204,000 metres, there's a little bit of infill drilling to get enough into measured to basically run a bankable feasibility study. But luckily, most of what we need to get into measured is shallow. And then we'll probably have, 1 to 2 rigs running around shooting some of these regional targets as well. So, the sort of drilling bleed will come down fairly quickly, but the majority is still Argentina.
Wonderful. And will there be enough meters in the current program to adequately drill the likes of the 600 metre gap where infill is required to bring on more ounces into the resource?
Yeah, I mean, we've actually drilled most of those holes already, and that's 60,000 metres we've done since then. Assays pending, and look, we've obviously got some of those assays, but the way it works is you can't put them out till after the resource, so expect a bit of a backlog catch up. But yes, we do. I mean, effectively the 200,000 metres will not get us as much regional exploration drilling as we'd hoped, but we're putting the meters into actually drilling out that gap zone and also centres and this new Verde zone at depth.
Chris, there's been a few questions just on the network to date. So can you just elaborate on the metallurgical testing that's been done to date?
Yes, so the metallurgical testing we've done it to date, basically we've done 28 separate flow tests. It's pre-feasibility level met work. The only things we haven't done that we'll need for a bankable feasibility study are the comminution testing, which we've got old testing there, and some of the variability testing. But basically, we've tested the skarn, two separate sort of composites. We've tested the intrusion hosted, the sediment hosted material. We've tested the same grades that we'll actually mine. And by the time we sort of look at running a leach circuit at the end, which will recover the final sort of 5 to 10% of the gold, we've got 95% recoveries of gold, low 90s of silver. We get a lot of it, well, most of it, 90% of the lead and 90% of the zinc out in the skarn. It's a sort of simple, not very fine at all. It's a coarse grind. We then get 15% of that material with grind finder. The metallurgy is a dream. You wouldn't expect to get, the grade concentrates we're getting out of a sort of deposit of this grade. But, look, it's effectively, we don't need to do any more for a pre-feas, and there's only a little bit more of a program that we're actually starting now to be ready for a bankable feasibility study.
Wonderful. Again, there's just a webinar attendees who just asked if you could go over again what tonnage, grade and gold equivalent production could come from the starter pit operation.
Yeah, so look, you've got that starter pit there. There's, 340,000 ounces at 5.3. So, and I'll do the arithmetic on the fly, but if we do 1 million tonne per annum in the skarn, then that's basically 53 million ounces of 53 million grams of gold. You divide it by 31.1, you're effectively looking at somewhere north of 120,000 ounces a year, just off your 1 million tonne per annum plant for those first sort of 3 years. It's in a $600 pit, so the cash cost is going to be less than $600. And then you add a 4 to 5 million tonne per annum plant treating 1 gram dirt, which is the intrusion hosted stuff, and that will add another 5 by 0.8, by 90%. Effectively, that adds another 100,000 ounces. But first 3 years, you're looking at $600 gold based on that optimized pit, and 120 to 130,000 ounces a year production, which it's a nice mine. Less than a year payback.
Let me just jump into this. So how many rigs will remain after this current program, and what's the probably sort of cash burn rate like for the second half of this calendar year?
So basically at the moment, we've got 5 rigs in Walilan, 2 in Ecuador. Cash burn off that should be about $7, maybe $8 million a quarter. Post this program, we will probably leave 2 to 3 rigs at Walilan, simply because we want to get that cash burn right down, which is 5 rigs across the board, which brings your cash burn down to probably 6 million a quarter, maybe a little bit under 6, 5.5. And, that lets us, 1 rig, 2 rigs perhaps doing regional exploration, and then 1 on the drill out. Probably starts at 2 on the drill out of the measured and 1 regional, and then moves to, 1 drill out and 2 regional.
Wonderful. Another webinar attendee just asked, can you elaborate on the strip ratios?
We're not allowed to talk about those, but look, I will. Basically, in the overall pit, it's a strip ratio of 10 to 1. And you've got to bear that in the context of, we've used $2 US a tonne mining for ore and waste. You go up the road and have a look at what they're doing in the feasibility study they've done for Jose Maria, which will move a similar amount of dirt, or Lindero, and they're basically mining at $1.20 a tonne. And then if you look in those high grade starter pits, the strip ratio there is 5 to 6 to 1. And of that material you're pulling out, half of that material is actually 0.25 to 1 gram intrusion hosted material that you actually stockpile. So that pays for the mining earlier. So, nice strip ratios.
Thanks, Chris. Just a question about the availability of water at the project. Do you maybe want to elaborate?
So basically at either end of the project, there are 2 natural springs that produce enough water to cover all of our drilling, our grade control, and all the process water we need. Having said that, we don't want to use that water. There's a bore field around about 2Ks the other side of the hill, where there's been some water bores drilled by Glencore that has enough water for process. That's saline water, so we'll actually take that water. It means we've got to build put in a pipeline a couple of Ks, which is only lay a sort of typical rubber line, but no, water's not an issue.
Wonderful. So has this resource changed the strategy at all?
Look, it has. What I think you'll find now is post this next resource upgrade, we'll probably now go hell for leather to get into production, simply because we know that high-grade starter pit is there. And I think, once you're in production, then you don't have to worry about capital raises to fund drilling in Ecuador. So yeah, look, it's pushed us probably a little bit faster into production rather than drilling for the next 18 months and seeing how big it gets. I think now, we'll probably move to production sooner. And, as I said earlier, we're going to get that kind of pressure from the Argentinian authorities now, simply because they've looked at it and they understand it's already a mine.
Thanks, Chris. There's a few questions coming through about our neighbours, our producing neighbours, actually. Is there any interest coming from any of our producing neighbours?
Look, there is. It's ongoing, and, that's probably not because we're ultra special. It's because they're paid to look at us. But there's interest. There's been requests to go into the data room. We actually have let one group into the data room simply because they were prepared to sign a 12-month standstill agreement. And before we let anyone into the data, actually, we've let two groups into the data room. Sorry, the second group is happy to sign a 12-month standstill, simply because I think we've got a lot of value to add in the next 12 months. But there's a lot of interest out there.
Wonderful. Sorry, I'm jumping around a little bit here. There's just a question about access to power supply.
So when I talk of sort of $100 to $150 million capex, we have basically priced putting in a line to the grid, which is about 20 million US. Now that 20 million US is all deductible out of our royalty. So basically it means, we won't pay royalty for the first 3 years of production. That's 10 cents a kilowatt hour power. We're currently talking to the authority if we can do a power swap deal, which would then let us put solar on site and put double the solar into the grid, take it back out at night. But look, effectively it bumps the capex up from 100 to 120 million, but it's a 3-month job to put a line in to connect to the grid power, and that grid power in San Juan is predominantly hydropower and solar power.
Thank you, Chris. And I think just finally, so what else should shareholders look forward to in the near future?
So I sort of alluded to it. I'm hoping to get the last of the first 2 or 3 holes in Ecuador back at the end of this week. So that'd let us get a release out next week. And those 2 or 3 holes, if we get them, I think are going to be ultra significant. They're the first 2 holes we've drilled on the 2 largest anomalies in Colorado V. The boys on site have logged both of those holes of intersecting 500 meters of sulfide. So we're pretty hopeful about what we see. It looks to us exactly the same as Cangrejos, which means, 500 meters at 0.4 to 0.6 style gold. And then, obviously we've been handcuffed in terms of, Walilan results until this resource is out. So there's a bit of catch up to look forward to there as well. And I think the focus there will be, what recent results have we got that would have moved the dial on the resource? Just, I think there's going to be quite a few holes that had we waited another month, and I understand we couldn't, we might have got a sort of, different outcome again. It's just a moving feast of when do you cut it off?
Well, Chris, I think that's all we have time for today. If we have missed any of your questions, please feel free to reach out via the contact details on the bottom of our ASX releases. But thank you for joining us all.
Yeah, and thank you, everyone.